So we got a pretty decent bounce yesterday. I thought it was relatively easy on the open, relatively little pain. You bought the initial flush. We got to move back up to pre-market highs. We hung that out there and then eventually moved back inside of the prior day's range. So let's take a closer look at it. So if you recall, the pre-market started buying into 232. Look for a flush below 232 on the open. We got that. And the reason I think it was relatively easy was you can see on the 5-minute the wick here is wicks. You can kind of see where it was been just, it would be bought in the 60s and then started to hold in the 80s. So once that happened, it was easier to just put in bids after the initial low was put in around 60 cents, buy in the mid to high 60s against the half. Small risk, and we ended up bouncing $2 from there, or actually more, right? Let's see. About $2.20. So for 20 cents of risk, once the low was established, pretty nice. So from a swing perspective, very nice bounce. Even from a quick intraday momentum perspective, got almost $1 right off the morning low. Then you got a consolidation. And a break to the upside. I think we've been targeting maybe 233 area, low to 233s, and you got that. So let's zoom out again. Now we say from a technical standpoint, now sellers are in control of bigger picture, right? We put in the high, we tried to do a retest, we put in our lower high, we got our big downtrend day, and each bounce attempt has been met with lower, lower, lower. So the way we look at this now is 234. We start to get some closes above 234 and we drop back down to our zero volatility environment. It sets us up for a reversal of this trend. We get some closes up here and then we break to the upside. We'd be looking at trading it 236 to 236.50 in this area right here. IWM I thought was also relatively easy. I think I was actually pulling that one out in real time as it was happening in real time. The reason this one is the same thing. If we go to the 5-minute, so we had the low from last week. We measure, could buyers get us back above that level? And so initially bought right on the open, 32.70s. I tried to get below 32.50. I actually couldn't get a print. Probably heard me say that. But we did quickly bounce back above 33, took some sales, came back down, bought again in here into the 60s, and we retested the high again, held higher, and then finally, what made this pretty clean was after the second bounce, we held the low from last week, and that's where people were like, okay, we held, and they bought, and then eventually after 10 o'clock, we started to hold above 33, and you got that move up to 34. Tried to roll over. I think I shorted this, flipped to short, and what did we do? We went to the half, then we pulled all the way back to 34. I think I bought this. And we went to 35. So that's a pretty big bounce on a percentage basis. So starting to buy in the 32.70s into 32.5. Again, it showed the buying on the open, and that's all you want to see. And then you want to see a hold above the prior week's low. And at this point, even if you were buying here and risking 30 to 40 cents, you still got over $2 by the end of the day. And so again, really good risk reward from both an intraday perspective and certainly using those short-term tape reading skills to establish longer-term swing positions. Very helpful in getting a much better risk reward than swing traders would typically get. Now looking at, for today, bigger picture. And then we know this is more wild. It's a little bit harder to game IWM. That's what made yesterday's open so nice. So a couple weeks ago, we dipped below 35 a couple times, and we spiked above there, spiked above there. That was the high yesterday. So I would say a consolidation back above 135. That would be interesting in terms of buyers starting to regain control from a bigger picture perspective. So that's that. So we got a bunch of things to work through today. So let's kind of work through them quickly. Let's start with CARA, positive phase 2 and 3 results for a disease, an itching skin disease or skin byproduct of people who suffer from long-term kidney disease. Kind of a big deal. Very positive reaction. So if we go back to 2015, the stock went vertical from $10 to 22.5, 23, then they crushed it down to 12, all the way down to 5. A lot of these small biotechs look like this because they don't have too many drugs, and good news, bad news, thing moves 30, 50% pretty easily. So spending a while here above 15. Last failure was right below $20. We're gapping above 20 this morning. I think 20, 19.5, 20. What did I put on the sheet? I put 1930 as the first kind of, I guess that was the prior pivot high when we failed right there. But I would think people who believe this is going at 22.5, 23, they would start to look at it buying at 20. More buyers would be, you'd be looking for at the prior high. Let's zoom in. We've got over 300,000 shares on this pre-market. Normally trades 2 million. We're probably looking at, we could be looking at over 5 million shares today. So it's going to be pretty liquid. So far, it did try to get to $20. You can see people were waiting probably to bid in front of that. And that's what caused this bounce back up to 2080. Now maybe we get a lower high here. We try to roll over. This area gets tested again right on the open. If it holds 20 here, you look for that bounce, and then you sell some, cover your risk, and see if you can hold above 21 for a second leg. The next one is TSRO. So TSRO, what was the news? Okay, drug approved for ovarian cancer maintenance. People who have had, I guess, ovarian cancer treatment, give them a drug. Once that initial treatment is completed, supposedly it said this news was expected, but it's still getting a lot of positive chatter. Let's take a look at the daily. This has been in a vicious uptrend for a while. I think analysts have been talking about this as a takeover candidate, which has helped them. Obviously, this drug approval solidifies probably that thought that they're a good takeover candidate. The bid is 166 right now. So if we zoom out, kind of look over the last few months, so it had this news here where it broke out from 165, went up to 180. Little topping process here over a few weeks, and then when it broke below 170 here, crushed it. I forget what this news was. I think that we actually bought into this. If memory serves, this is the one that I think I bought, started buying at 144, and maybe even got stopped out at the low. So this gives us a pretty good idea. So after the initial announcement yesterday, it got as high as 69. I think I did have 69 and 70 as the most logical because of the breakdown of the resistance areas. And this is the spot 65, which we highlighted, and obviously that's why there's a blue line here. Prior important level. So that might be the spot where they try to hold it. If it doesn't hold here, though, there isn't really much until a few dollars lower. So we want to be a little bit careful there. And we got a question. Yeah, I mean, it really depends on your trading style. So don't have enough time to discuss that right now. But generally, covering your risk is taking some of your position off to ensure that, worst case, you would be break even on the trade. RHT. So, I don't know. The analysts were saying positive things. I looked at the numbers. I've watched this stock and traded the stock for many years. I didn't really see anything that was particularly great. Here's the daily. The thing did already, maybe they're just trying to get it above this 85. So, I guess it's been consolidating for a long time. Let's see when it started consolidating. So 2 years ago, when it gapped up above $73, Ren made a run to the 80s. They crushed it here. I guess this is the turmoil at the beginning of the market, the beginning of 2016, and got back inside of its consolidation range. So it is a 2-year consolidation. So maybe they're just kind of saying, okay, the numbers are still holding up well. Maybe people are thinking because of kind of everything moving to mobile and the desktop segment losing growth or maybe even shrinking, that they would have problems. And the fact that they're not having problems, they're continuing to grow even at a small pace. Maybe that's why they like it. But regardless, it's gapping up above the prior high right now.
So anyway, that's a long 2350s, 60s, 70s. So maybe get some hot. So maybe some shorts.
So as I put on the sheet, no resistance because it's above the highs. The first spot where I feel comfortable looking for people to buy it would be in this area right here.
Started showing signs of watching. Started showing some signs.
So we'll see red on the open. I mean, from a pure momentum standpoint, initial reaction positive, goes high. Looks like it might open actually above the after hours consolidation here at 86. So that's very bullish, and there is no resistance. So you got to be careful on the short side with something like this. I've watched this 86 level.
Oh. Okay. So
normally trades 2 million. Could be looking 5 to 10 million shares today. Next one is Darden Restaurants. I have a feeling a lot of what's driving this is the acquisition that they made in cash, which probably looks as a growth opportunity. I mean, they did beat by 4%. It's up 4% right now. So it ran from 64 to 79. I don't think that was earning. I'm not sure what that was. So the bid's above 78 right now. Let's look at this on the daily. So on the daily, since it topped out here around 79, came back up twice to 77 and to 77 and a half. So that's the spot we would be looking at. What do we put on the sheet? Yep. So that's I put that on the sheet. 77 to 77 and a half. Potential support.
It's a very strong move.
And then 79 resistance. So this is a fairly simple way to play this. It comes back down right on the open. We see what happens in this potential support area. If it holds and then gets back above 78, starts to hold above 78, you make a play into the 79 resistance that's on our sheet, and then we see what happens from there. The next one is EVH. This is just on here because they did a spot secondary. They're not getting any of the money. $20. You might as well give it a shot there. Looks like some people already did. Not sure how easy it was to get up at 20. But that's where they priced 7.5 million shares. Looks like they had some good news yesterday. And, look, I mean, with the top tier, and then it went all the way to almost 22. So they must have had some good news. They used that to selling shareholders did. The company didn't get any of the money. But you can see 20 to 1985 was good support over the last week. Certainly if you can get it in that 20 area, which I'm not sure if we'll get that opportunity again, because people are already stuffing in and buying it. That's why I put it on earlier. And Snap yesterday, look at this. So Facebook literally just came out with some features, I guess video stories, disappearing stories, which I guess that's Snap's entire business model. When someone like Facebook that has a couple billion users is able to, or tries to duplicate exactly what you're doing, and you've already got fundamental questions about your business, and you've just run up 4 or 5 days in a row, it's a recipe for selling. So yesterday was strong. Now, I believe what I did was I bought it. I had a script to buy it on the open yesterday at 23. It held the support from the prior day, and then it bounced back up to 24. So there was a good trade there, and it closed strong. It gapped up this morning until I guess the Facebook news came out. So it's probably the same trade again today. Here's the support area, and the only thing different I would be looking for though this time is does it make a lower high? Because people are like, okay, it's run up a few days in a row. Uh-oh, Facebook, that makes them nervous. And this is the run that I was talking about. I mean, it already was bought a bunch of days in a row. So it was likely to start consolidating anyway. But if you can fails at 23.5 area, where there's a good short there. If it for some reason steamrolls right through support from the last couple of days, then you're in a position of strength to catch a move all the way back down to 22. So question on Tesla, and again, I've been talking about Tesla recently on a big picture perspective for the possibility for the longer term breakout. And it was interesting, we were looking at a 260 the other day, they crushed it, and I lost track of it, but as soon as it got back above 260, it was probably a buy again. And the reason you buy it when it gets back above 260 is because you're positioning yourself to what happens in 264, 65. Somebody did a nice job yesterday in the chat, by the way, of saying, I forget what they said, but they alerted you to the fact that it was potentially breaking out above this prior resistance. And once it did break above that 264, 265 resistance, it was clean and went up $4. And then after pulling back and testing the support from the morning, this is about as clean as you can get in a stock. I mean, this is what a stock looks like when people really want to be long it, and it's painful for the shorts. But goes up, opening drive, clear support area, has a few dollars, they come back, they test again, closes at the high. What happens the next day, I'm not sure what the news is here, but it looks like it's heading to $300 plus. And just a question, can you manage a position well? So the question related to gap and go, it's a little bit too big. Especially, I don't know what the catalyst is. Let's see here. So Goldman, I actually saw the news this morning that Goldman trimmed their delivery estimate. That's obviously not for the first quarter. That's not what's driving it. It's more this investment they received, a 5% investment from this Chinese company, it looks like. So, which is a very big company. Which if people are thinking they're going to get any additional funding they need from them. So let's zoom in. And so the idea relates to, there's a specific trade when a stock has been consolidating for a while. This one has been consolidating for a few months, above 240. It ran up to 280. Then on the earnings, remember that we said if it fails here, that might be a nice short. It failed there again. And now it's gapping to that area on this news. And so I would say if it actually on the open tests the 280 and then doesn't pull in more than $2 or $3 and then gets above 280 by 10 o'clock, that yes, that might be the beginning of a move to 300. So good question. Not the Chris George, since you had an opportunity to get in yesterday above 260, and if you're already in it and you add it to the position up here, you'd be in the driver's seat. But yeah, it's worth making that trade, I believe. So good one to ask about. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.